Hey everyone, thanks for stopping by my channel. My name is Kadeem for those of you who don't know, and my whole goal is really to share financial education, financial knowledge with people like you. I find that in Canada, there's not a lot of people doing that, and that's where I come in. So if you find this information valuable, you find it beneficial, I ask you to like, subscribe, and share this content with someone who you may think may find it beneficial as well. All right, that'll help to make this common knowledge and push this information before more people. So again, I thank you for stopping by. Let's go ahead and get into the content. So today we're gonna have a conversation about renting versus owning, right? I know the vast majority of people would rather own than rent, but unfortunately a lot of people I come across, they're actually renting, they don't even realize it. Now let me tell you what I mean. I come across a lot of people, family, friends, acquaintances, and they think they're covered fully for life with their life insurance policies, right? They think they have permanent insurance and it's going to pay out at some point to go to their beneficiaries and so on. However, when I look at the policy that they have, a lot of them have term 10, term 20. And what that means is, for example, the term 10, after a 10-year period, it expires, meaning you're no longer covered. If you want to renew it, you can do so. However, it's going to be at a much higher premium, right? It's going to cost you a lot more, because a few factors that determine the price of your policy, your life insurance policy, is, of course, they take your health into account and your age. So if you're 10 years older, it's gonna cost you that much more, right? So going from 10 to 20, it may not be a huge jump. However, 20 to 30, 30 to 40, and as time goes on, it just gets more and more expensive, right? And you don't really have any cash value being built up inside of it. So that's what I'm talking about. That's the renting side of things. All right. Now it does have its uses, right? Let me say that first. There is a way to use it depending on your situation. For example, if you need to take care of a certain obligation for a certain period of time, then it makes sense to get term insurance, depending on your situation and depending on what you want to do. Now, for example, your mortgage, right? A lot of people believe you need to get mortgage insurance, right? But let me just say there's a way to kind of go around that, if you will. You don't need to get mortgage insurance from the banks. They push it, but you don't really need to get it from them. All right, if you want more information on that, feel free to reach out to me. But term insurance is another potential option. Again, there's more details around it. Don't take that as the end all be all. Talk to a professional about it. Now, when it comes to, so that's the renting side of it, right? You take care of a certain obligation for a certain amount of time, certain amount of years. After you take care of that obligation, that 10 years passes or that 20 years passes, you no longer need it. So, okay, cool. It was cheap while you had it and it's done with. And that's the reason a lot of people go with term insurance, is because it's cheaper. But they don't realize that there's something else called permanent insurance. And there's many different types of permanent insurance, right? You got a whole life, you got a universal life, you got T100, which is essentially a whole life without the cash value attached to it. Now, you heard me say cash value. So I talked about the term insurance. There's no cash value in it, right? You're just covered for the 10 years, you're covered for the 20 years, you don't get anything back. When you rent, you pay your rent, you don't get anything back. You're not building equity. However, when you own a home, you're paying the mortgage, right? You're building equity. As the value of the house increases, your equity increases. As you pay off your mortgage, you're putting more into the home and you're building that equity, all right? That is a similar way that the permanent insurance works. The whole life, the universal life, right? They have two different portions of it. They have the actual life insurance, or death benefit they call it, and then they have the cash value. And that cash value, at least with the universal life, is invested in the market, right? The whole life is invested as well, but it's invested a little bit differently. I'm not going to go into that here. All right. So those are essentially your three different types of life insurance, right? And it's very customizable, right? Depending on, again, your situation and what you're looking for. That's why it's so vital and important to sit down with a professional to get that information. Now, I mentioned different types of life insurance. Cool. And some people, again, they don't like that word itself, that phrase, life insurance, right? It's like the word budget for some people, which is like a cuss word. I don't get it. But at the end of the day, life insurance has its uses, right? There's certain situations that anybody can use it for, and it makes sense. You may not use it for the same reasons I use it, right? Someone else down the street may not use it for the same reasons that I use it. It's a tool. Like I always say, it's a tool, and based on the way you want to use that tool, it'll work for you as long as you make it work. You can utilize the tool to work however you want it to, as long as you know what you're doing. All right. So again, the tool is neither good nor bad. It depends on how you use it. If you pick up a knife, you can use it to cut your vegetables, cut your fruits, do whatever, right? But if you use it to intimidate somebody or something else like that, now it becomes a weapon. But the tool itself isn't bad. It depends on how you use it. So that was just a quick little video on different types of insurance and different ways to kind of utilize it or what they might be for, right? Again, that term insurance, it might be for something that you need to cover temporarily, right? Like that mortgage, like taking care of your kids, for example, until they grow up, just extra insurance, just in case, God forbid, something were to happen to you. There's that extra package, that extra protection to financially take care of them if something were to happen, right? Now, the other side of it, very flexible. The permanent can be used for many different things. You build up that cash value. Some people use it to supplement their retirement. Some people use it to gift to their children or their grandchildren, because you're building up that cash value and you can get access to that cash value based on certain stipulations down the road, right? And you can still have access to that death benefit as well, again, based on how the policy is set up in different stipulations, right? So again, hopefully you found this video informative. Hopefully you got something from it. Go check your policy. And if you're not really able to read it, sit with a professional. Don't pay, mind you, don't pay, but sit with a professional who will do it for free and kind of just look it over for you. Because I've sat with a lot of people who were 100% sold on the fact that they had permanent insurance, but it ended up being term. And if they waited to sit with me, they would have just ended up paying a lot more, to the point where they might have to cancel the policy because they can't keep up with the payments. All right. So again, hopefully you got something from this. Kadeem here. Stay happy, stay healthy, and stay blessed.